Yeah, everyone. Good afternoon, everyone. I hope everyone is doing well. Hope everyone had a great weekend. And today we see over here the 4 hours time frame of gold on trading view charts. We see the price of the gold from the last uh, 2 weeks. We see the price was moving in a complete uptrend over here. For like 2 weeks it was going really high, and we see the volume burst of the 4.6 million, and we see there was a 500 above points going up on the gold. So what we saw here right now for the last week, what happened was last 2 weeks again we see gold had made a little bit of correction, taking out some liquidities and the early retail trader stop losses. And we see like the how much it retested. We see that it did not make like a lot of retest, like it climbed more than much more than it made a retest of a downward movement. So the trend will be continuing of the gold overall, because we see the the retests were not sufficient enough. The price had failed to cross the new low from this support area. Here, let me draw this. From this support area, the price had failed to cross a new low below these order block. We see price did not cross like this. So we can expect the next movement like that way. Like, let's take the measurements. We see over here the price went like that from the previous drop from here. The previous drop was from here, but it made a double movement of above, and we see the double. It went in a double way, double times the way it made upward correction. After that, after the breakout, it went another maybe 250 2500 pips above, and we see okay, so what we can do is we make a measurement from here and close. Yeah, so the next could be around these levels of 3800. From this level here we see 3750 to 800. It will be going accordingly to these measurements. And another one reason I would like to share with all of you, here is the demand zone. Previously, when it made a breakout from here, when it made a volume burst, then we see there was a volume of 2.96 million, and now we can expect that twice it can go. We are, and now it is around 1.13 million. So maybe by today, tomorrow, it could be doubling on the volume. So it will just first make a the correction from here, then make a breakout of a double movement and expect the next price to be around here. So it could take around maybe another 10 to 15 days to reach to till here. And what people do generally do the mistake over here, what they do, they don't take it like that way in a technical. Where is the long positions? Yeah, they would just do like that way. They would take the trade on a basis of a risk to reward ratio, which is a totally a wrong approach. Which is a totally a wrong approach. Taking a risk to reward ratio like this they will take. And we see closely, if you see, the prices have already, when they took the positions, sorry, the sorry about this, it's getting wider. Let's make it here for a better quick. We see over here, people when they calculate the risk to reward ratio, the price actually moved to the direction. There is no doubt about that. But what it did first, it had taken out all the positions from here. All the stop losses were hit. People took the position around here and it hit the stop losses and went to the direction. As we see, it has taken out all the liquidities. All the money was out of the market. All the volume got reduced and the big players entered and slashed the price up. So what is the correct solution for this is take the advantage of the volatility and not the leverage. Means don't be like on over leveraging on anything or any asset. Everything has to be going up only on the bull run. Gold supplies always get less due to the economical factor and AI. In AI chips, all the gold is being used. Even if tariff will bring it down, there will be a big buyers for the gold right now, like Microsoft, Nvidia, like anything, IBM chips. They are using gold into it. So gold will be the biggest asset, and gold will be always on the bull run because the supplies of the gold is always getting limited. Like gold cannot be grown from the trees or gold cannot be farmed. Gold is a limited. Like when you, like how water is scarce in this world, the same way the gold, accordingly to the economical factors. So like we see, may so the correct thing over here, what I can say is measure, take the measurements, like take the measuring tool, check the volume, and it could be similar to this within next few days, and enter on this kind of position and avoid over leveraging. Means just add maybe 1 unit of gold. In one day you can see at least 500 to 1000 pips is very easy to capture within a day. So this is how it is done in the risk management, and be only on the buys and not on the sells. As we see, the market of gold hasn't made any much corrections over the past decades. We see, just take the history of the gold. We see the past 5 years of the gold. Market is just on to making a higher highs all the time. Check one high, two high, three high, four high, five high. So this was maybe the biggest correction of here. in 2020, but the market then ran up. So we see all the way the market hasn't made any big corrections, means it hasn't dropped like anywhere below. It's always failing to break a new low, and big players are always seeing the target. So if we calculate everything from check here to here, how much was the volume? It was 10 million, around 10 million. Then after that it kept increasing the volume. Check 12 million, around yeah, around 3 months. Okay, thank you guys, and have a nice day ahead.